Introduce everyone to Marina, one of our co-hosts here, along with Marzanne from Blockchain by Women. None of this would be possible without their support and help here. I also want to thank our panelists. Thank you very much for joining, and we'll introduce them shortly, or they will introduce themselves shortly. I want to welcome you all to our first event of 2020. We started Blockchain by Women to increase diversity in the space, as well as educate on the latest developments in the space. And we're excited to talk about tonight's event, which is all about data-driven investments. Having seen investments in DeFi and crypto grow tremendously in 2020, we want to hear from these experts where they think crypto and digital assets will be growing in 2021. We're honored to have our guests here talk about what metrics they consider when making investments in blockchain companies, as well as protocols. As data takes a big role in evaluating which investments to make, they will share how and where they are investing and other considerations to make. So before we get started, wanted to go around and have the panelists introduce themselves. Brynly, would you like to start us off?
Sure, I'm happy to start. So I'm Brynly Llyr. I'm a general counsel in the space. I've been a general counsel in the crypto space for over 4 years now. I work at a company called Celo. We work on the Celo platform. And before I joined Celo in 2018, I was general counsel at Ripple for just about 2 years. And before that, eBay and PayPal. So that's a bit about my background, and really happy to be here. Thanks.
Maria, would you like to introduce yourself?
Sure. Well, first of all, thanks so much for having me. I am a partner on the investment team at a firm called Electric Capital. Electric Capital is a San Francisco-based VC firm. We invest in blockchain-based businesses, fintech companies, and we have invested in companies such as Anchorage, Celo, Coda, Derivativex, so kind of up and down the value stack in blockchain. Prior to joining Electric in 2018, I was co-founder and CTO of a supply chain startup. And prior to that was at Microsoft working on search tech. And in general, graduated with an engineering degree and have a background in engineering and in product management before joining the venture space.
Great. And Sinhae, would you be able to introduce yourself?
Sure. Hi, everyone. I'm Sinhae Lee, and I'm one of the co-founder and partner of GBIC, which is a crypto fund based in United States, South Korea, and China. And I'm currently based in South Korea, Seoul. We also have a consulting arm to help our portfolio companies called Block72. And we have been investing and working with many projects, including Paper Labs, a lot of layer 1, especially, for example, Oasis, Thunder, and also some of the application layer, such as Blockfolio, which was acquired by FTX, and working with some exchanges such as Bittrex, Bitfinex, and etc. And before that, I worked in the fintech area in San Francisco called NerdWallet and Coin, which was a payment device company acquired by Fitbit. And before that, I was a consultant at McKinsey & Company, and I graduated from Stanford MBA. So trying to connect different regions, especially China, Korea, and the United States, and also the fintech area and the blockchain. So very happy to be here.
Thank you. And Matthew, could you introduce yourself?
Yes, of course. Thank you very much for having me. And it's great to be on the panel. And I'm really looking forward to learning from Brynly, Maria, and Sinhae. My name's Matthew Merle. I'm based in Silicon Valley. I've been here 35 years. I too started off, came to Stanford Business School, went to McKinsey, senior partner Carney and other things, first career, but then became an investor 20 years ago, internet, fintech and digital content, with my wife, Alison Davis, who is the CFO and head of strategy for BlackRock, BGI BlackRock. But anyhow, as the years went by, we learned about blockchain in 2013. And I think because of our internet and fintech experience and background, we sort of globbed onto it pretty quickly. And today we are the most active fund of funds in the space. We're investors in 20 blockchain VCs globally in Asia, America, and Europe, and through them in about 250 blockchain companies and projects, including 20 of the blockchain unicorns. And then just to finish it off, I'm also chairman for Securitize in Europe, vice chairman SFOX, the crypto prime dealer, and chairman of the Universal Protocol Alliance. Back to you.
Right. Thank you. And I forgot to introduce myself. I'm Karen. I started Blockchain by Women, but I also started another company called BlockchainIntel, which is focused on compliance reporting as well as identifying fraud. So we work with law enforcement, but also with a number of fintechs to identify where there's fraud in their blockchain transactions, as well as any kind of ACH or credit transactions. Now, we were recently acquired by a mobile app security company called Appdome. And so we're excited to pursue our mission of increasing safety and securing applications of all types. And so before we go into the questions we have for our panelists, a couple of housekeeping items. First, a disclaimer. We know we're talking about investments today, and it's been a very exciting year. And it will continue to be an exciting year, but just want to say we are not advising you to do or make any investments in crypto. Please consult an investment advisor if you have any questions. And then in terms of any questions that you may have, we have some questions here prepared ahead of time from our audience. But if you have any questions, please enter them in the chat window, and we will do our best to incorporate those questions as we go along in our talk. And if we miss any, we will certainly try to address them at the end or afterwards in a Q&A that follows in the email follow-up. So please ask any questions you have. And so now, just to start us off, 2020 was a banner year for cryptocurrencies, DeFi, and stable coins. Given the recent regulatory actions in the US, the new Biden administration, regulatory actions in Asia, as well as China's CBDC or central bank digital currency expansion plans, do you think we will see more investment in blockchain companies in 2021? In what areas? And if you want to add any color on these new regulatory actions, please do. And so if we start off with, I think, Brynly, for the regulatory side of things, given your legal background, do you have any thoughts or comments to make on the recent action?
Yeah, I mean, just broadly going into the new administration, I think it's going to be really interesting to start and to continue to build relationships with the new head of the SEC, the new chair of the SEC. So in many ways, we are, just at the beginning of really understanding what will be important to this administration. I think in many ways, blockchain and the innovation that we can expect really works well with what this administration is valuing, which is, support to people during COVID. I think blockchain is a really great way to reach lots of people quickly and inexpensively to move value. So I'm encouraged. I mean, yes, there have been regulatory actions. I hope that looking forward, we will really be focused on what this technology can do, how it can improve people's lives, and we can really work with this industry really closely with regulators to not only encourage innovation, but encourage more responsible innovation. And I'll let others speak to the investment angles.
Yeah, I can start. As Karen mentioned, it was a great year for DeFi and stablecoin in 2020. And they really prove that there are a variety of financial applications in cryptocurrencies, such as lending, DEX, stablecoins, and etc. And it's just more than the concept we had, which is digital gold or store of value, right? I think in 2021, I think it's gonna further develop and more popular use cases will come out, and probably a new area such as like synthetic assets, autonomous money markets, and also insurance and DeFi, because there are gonna be a lot of hacking issue as well. So I think there are gonna be more and more new areas to support that financial aspect application as well. And I expect to see some more of collaboration between this DeFi and existing B2C fintech services as well. And we all know that the Ethereum is a great platform for many DeFi projects, but it still have a problem, right? Such as very slow transaction and high gas fee. I was trying to make one transaction last night in Korea, and it cost me like 100 USD, and it took me almost like 2 hours, right? So I think there are gonna be a lot of various layer 2 solution, such as ZK rollup. And also we will see a lot of interoperability or cross application between Ethereum and other mainnets as well. So we are also focusing on some other layer 1, especially Ethereum substitutes such as DOT, Polkadot, or Solana, etc. And there are gonna be more and more application on those layer 1, just like we see so many applications on Ethereum right now.
Well, I'll build on top of what Sinhae and Brynly said then, if you don't mind. Being a regulator in an area of fast and moving emerging technology is a very hard thing. They are responsible for establishing regulations that work, and they understand the past, but they don't yet understand the future. And we don't really want regulators to rush to create regulations in a very fast-moving space, because they can actually chill innovation. But the other side of that equation is that I did a project funded by Google almost 10 years ago now, where we actually analyzed globally the degree to which regulatory uncertainty chills innovation and investing. And the problem is that regulatory uncertainty does chill investing. So you've got this trade-off, right? You've got this paradox that the regulators are being pushed to resolve regulatory uncertainty, but at the same time, we don't want them rushing into creating regulations that slow down the innovation and don't fit. And so the regulator's job is a very hard one. I think Switzerland has really got their act together very effectively. I think London's moving fast now, Japan too. China obviously has embraced this area of technology completely. And one hopes that the US now is turning that corner. We saw some very interesting and positive regulations come out at the end of last year. But of course, now we're going to have new heads of the CFTC, SEC, and so on. And we don't know whether they will build on top of that or want to change it, or what their stance will be. So it's very interesting to watch and see, the next few months and what actually plays out.
Yeah, I think there are a couple of very interesting macro changes or macro turning points that we're seeing, that we started to see in 2020, and I think will certainly build momentum in 2021. Obviously China was mentioned. They have a enormous project that they are rolling out very quickly, basically having a digital version of their currency. And I think that's certainly significantly going to, change the way that the world and other governments look at crypto and look at digital currency. Kind of value judgments aside, I think China has amazing distribution capabilities in terms of how they can push a centralized digital currency, whether it's through their Belt and Road Initiative or it's through their very centralized monetary system kind of internally. And so I do think, as a turning point, it would be interesting for US and Western governments to start looking at if China can make the RMB a global or regionally dominant settlement layer? Does it make sense for a Western or US government to look at rolling out their own digital currencies or borrowing on some of the existing stable currencies, obviously that already exists today, or even looking at something like Bitcoin, right? Something that is truly decentralized as maybe a counterweight or a counterpoint to the more centralized digital currency that China is pushing out. So I do think that's one interesting macro trend that we're going to observe in 2021. The second one is, is also something that has been gaining momentum for a very long time, and it's this concept of how much power do tech companies have? What does it mean to be private on the internet? Who controls free speech? And these are topics that the United States has certainly been grappling with as for a very long time. And recently it's obviously reached a head with Twitter's decision to ban Trump from its platform, AWS's decision to exclude Parler from its services. And I do think, regardless of where everyone falls on the political spectrum, there is this question of, how do we respond to centralized power in these tech companies? And I do think more and more people certainly are going to be looking at the decentralized stack and saying, can we actually take some of this power back? Can we actually create an internet that looks maybe a little bit different from the one that we've experienced so far? So I do think, I feel like all the panelists touch on some really great developments that will be happening, and certainly DeFi is going to be a huge thing. It's strange to think that this time last year, I think we were at 800 million locked in DeFi, and now we're at 24 billion. So enormous growth happening in that sector as well. But I do think there are, between China rolling out its digital currency, these questions around free speech and and power in tech companies in the West, we're certainly going to see a lot more emphasis and a lot more interest in the decentralized stack and in cryptocurrencies in 2021.
Yeah,
And
I really agree with what Maria said, and I think it's gonna be another great year for the stablecoin. I think like the CBDC, China rolling out the CBDC is gonna be a great facilitator for a lot of stablecoin as well, because Chinese CBDC has a great pros on adoption, and as Maria mentioned, that they have great distribution power, but then a lot of people are still worrying about the central governed currency, because we know that one of the reasons that China government is rolling out the CBDC is, number one, to control the capital outflow, and number two, so that they can more effectively track how people are using money. So I think against that kind of theory and in that direction, I expect a lot of new stable coins are gonna be published and also printed out. And it might not be necessarily from the government, but it can be from the small government, just like Celo and many other stable coins that the financial banks will issue as well. So I expect that the total stable coins printed will be probably over 100 billion USD by the end of 2020.
And to just round that out, that part of the discussion out, last night I was part of another panel on the inauguration, and in talking to the congressmen and women who are now going to be leading a lot of these initiatives, they are very excited about the blockchain from a financial inclusion perspective. Of course, there are a number of other issues we'll have to address, like we mentioned, but I think if we continue to lead with that angle, at least in the US, we will hope to get continued progress in this area, or continued support for blockchain development. We also are incidentally having another follow-up on our central bank digital currency session last year. And so please join our fireside chat with the Federal Reserve Bank of Boston coming up in February. So our next question is to kind of look at non-financial investments or companies that are developing solutions in the blockchain space. You know, we've seen the hype cycle, and a few years ago, there are a number of non-financial use cases, but in recent years, you know, the financial use cases have dominated the market. In your opinion, you know, we talked about NFTs and some other use cases. What are the, if any, you know, most promising non-financial use cases for blockchain?
Well, I'll dive in since no one else. And Brynly, did you want to answer the question? No. So, so the way I think about this is that there is actually a technology stack going on here. Distributed ledger technology requires a great deal of foundational technology to be built, the protocols, the approaches to distributed computing and storage and security and so on. And then, of course, we see great promise in all of the identity registry, indexing, and so on things that are down at that foundational layer. In the middle, we just talked a bit about the transactional layer. And in this case, the transactional layer is primarily about digital monies, digital assets, and the upgrading of the world's infrastructure to really do all of its financial work. And then we have the application layer on top. Most of the applications that you talk about, like healthcare applications or video game applications or supply chain and logistics applications, they sit at the top of the technology stack. And as I think it was Sinhae said, if throughput times, transaction speeds, costs, security, reliability, if those aren't yet ironed out, it's very difficult for an enterprise, let alone an entire industry, to accept a new set of technologies and solutions. And so the reality is the applications are lagging. A lot of people see the opportunity to do something amazing, but in practice, they can't do it until throughput times are greatly accelerated, costs are greatly reduced, and so on and so on. Personally, if you were to ask me to pick an example of an application that is absolutely carving out what the future might look like, it would be Brave. Brave is the privacy-focused browser. And I actually heard one of you say that you used to work at Microsoft on search, so you'll tell us a lot more about the realities in a minute. But at Universal Protocol Alliance and at Uphold, we actually help power the wallet that's in the Brave browser that enables the basic attention token to be used when people choose to reveal their clicks and be paid for the privilege of doing so. Today, we still, we essentially have an advertising broadcast model where we are the guinea pigs and we're the product that's being sold. We're shown advertisements and someone else gets the benefits, the intermediary gets the benefits. Brave is sort of demonstrating just how different the world could be. And I know it sounds a little bit crazy to think that the advertising model that's powering Google and Facebook might be changed. But I remember when I was the head of marketing, global, the SVP of global marketing for Gap back in the 90s, we didn't believe that anyone was going to use Google clicks. It was all about television. And today, Google and Facebook alone have I think 1/3 the advertising revenue of the global advertising industry, which is remarkable. So things do change. So I'm going to stop right there, but suffice to say, that's a great example of an application that's getting traction, tens of millions of people, and could actually be a window into what the future might look like.
And I think it also speaks to some of what Maria was talking about in terms of the possibilities of this technology to mitigate some of the downside of what we're seeing in these concentrations in big tech companies really owning lots and lots of data and really just are changing the perspective of how we feel about that concentration of power in the hands of the Googles and Facebooks and Amazons. It provides another choice, which I think is really helpful. We're also at just the beginning of where this could go. So I think in many ways it is really exciting. We can also talk about another example of kind of a non-financial use of the blockchain. And I think it can also merge with the financial aspect. But one area that I think is really interesting is working with natural-backed currencies or natural-backed assets. So this idea that you can tokenize things like clean water or pristine forests. Now that's really interesting. You could also tokenize carbon credits and things like that to make it more efficient. But why, yeah, but why does that become interesting? I think it becomes interesting in many different ways. Again, we're just the beginning. But if we think about how we can transform our money and how we transact, imagine you have a stable coin, and you can choose any of them out there, and you package it with a token that represents clean water. And that package becomes how you transact. What I love about that is now as a consumer, where you have a choice in how you pay for things, how you transact, you now have a choice that matches up with your personal values. I care about the environment, and so now I'm going to use this currency. Doesn't change my day-to-day. I use it like money, and yet doing that, I am actively taking more steps to protect the environment. So again, really early stages, but where this is going, I think is really exciting. And thank you for the cheer, Matthew. I appreciate that.
I'll explain why, but I'm going to let the other two talk first.
No, Matthew, you can go ahead first.
No, really, I don't want to.
I know your like excitement. So
Maria, you're the search expert. What do you think of Brave?
No, I certainly do. I mean, I absolutely agree with kind of what Brynly was saying earlier, which is it's really about bringing more choice to consumers. And I think, you know, Brave absolutely does do that. The fact that the model is based upon paying you for viewing an ad, you know, kind of turns this advertising model that we've all somehow taken for granted and somehow accepted on its head, and really respects user privacy and user choice in that way. And so, you know, absolutely kind of advocate new browsers and new privacy enhancing browsers coming out. Other applications that are interesting and that kind of do, you know, maybe have certain aspects that can cross over to the finance world is, you know, around NFTs, which Karen mentioned in the beginning. There's been a really kind of tremendous push towards digital art and tokenizing digital art. There are definitely believers and disbelievers on both sides. You know, I think the common argument is why, you know, if you have a JPEG, then what does it mean to really own that? I think all of these arguments aside, and I'm kind of learning myself, what we have seen is a crazy increase in volume in terms of the amount of art that is being digitized, and the value at which they're being traded. You know, I think something like CryptoPunks, which is kind of like a fun digital project that just digitizes certain avatars and certain characters. They're being traded for tens of thousands of dollars. And that is, you know, and that is something that is happening. And I think that is, that's been really interesting. And I do see a lot of artists coming out now to engage with that and using that as a way as a new platform, really, to engage with their fans. You know, we talked about alternatives, and I think that is an alternative to something like an Instagram, where you're really beholden to them to communicate with your fans. A lot of these artists are now using the ability to tokenize their artwork to engage with their users and their followers that way. And I do think that, you know, we're in the beginnings of something kind of interesting there with this idea of influencers or artists tokenizing their work, and using that to smooth out a lot of their income. For, you know, for an influencer or for an artist, the income can be really stop and go. You know, one month you're maybe, you know, you sell something, it's $100,000, the next month maybe nothing. And so the ability to start seeing a more steady income and also engaging with your fans through these tokens might be something that becomes the norm going forward. I'm not really sure what the timeline on that is, but it has been interesting to see that start to take off, or really the beginnings of that happening in crypto in 2020 and in 2021.
Yeah, I definitely agree with the NFT. So if I have to pick one area, one non-financial area that's we are really excited is NFT. And on top of what artists do, we see a lot of different trial from the company. So number one, a lot of IPs. Even we know that NBA Top Shot by Vapor Labs, uh, and we know a lot of movies or many IPs are trying to involve the NFT. So even like the big game companies such as like Unisoft, Atari are getting more interest in the blockchain games, and I think it's gonna lead to the NFT as well. And I think it's probably the one of the most popular application except the non-financial, because I think human beings are collectors by nature. And when we made the investment decision in Vapor Labs, we were fascinated by their vision, which is blockchain for billions, and that's what they want to do by trying different things, right? By first creating crypto kitties, and now involving different artists and MBA and any valuable asset that they can make the tokenized assets. And the second thing among NFT is the many content and entertainment companies are setting up and working for the metaverse trend. And I think with this metaverse trend, we will see a lot of NFT digital avatar as well that they are gonna create. So on top of what Maria said, the artist NFT, we see games and other areas as well.
So let's talk a bit about how you evaluate investment decisions in blockchain, in crypto, and really the data that you're using to make those evaluations. Maria, since you just published a report, can you share highlights of that and the data that can be used to identify opportunities and trends?
Yeah, absolutely. So one of the more unique things about Electric Capital is everyone on the investment team has a computer science background, are all kind of engineers by training. And so we do actually build a lot of our own products and our own infrastructure in-house to help us with our investment decisions. And one of the signals that we look at certainly is developer adoption. And what we've done is we've effectively indexed almost all of GitHub at this point. This year, we looked at 89 million commits and at all of the ecosystems in crypto. So this would be Bitcoin, Ethereum, things like Polkadot, Llyr, Solana, really looking across the board to understand the teams that are building on these platforms. To understand what developer adoption looks like. And so I think the really exciting thing that we've seen is that new crypto developers are really growing for the first time since 2017. So that I think is the first highlight. Developers tend to kind of follow price action sometimes. And after 2017, we did see a stall in the growth of developers as prices fell really 80–90%. But, developers actually didn't fall by quite as much. Actually, full-time developers grew during that time, but they did become a little bit stagnant. But in 2020, we did see them grow by 15%. And in fact, 80% of all the active developers today came in the last 2 years, which means that they hadn't actually, at the time when we published the report, they had never really seen a bull market. And so this is certainly for a lot of them the first time that they're seeing prices like this. And I think that's really good for the ecosystem in the sense that these developers are really here to build. They're not really driven by price action. And the other thing that maybe not surprising, but certainly confirmed what a lot of people knew, was that there is a flight to quality in the sense that high quality ecosystems are really growing. So developers are congregating into these high quality ecosystems. So developers, if you look at the top 200 platforms by network value, developers outside of that fell 30% since December 2018, but developers within the top 200 actually increased slightly. And then I think maybe the third most important thing that we've seen is that developer activity is really strong across Bitcoin, Ethereum, some of the newer layer ones, and of course decentralized finance. So Bitcoin has, at this point in time, 70% more developers than it did 3 years ago. Ethereum captures almost a quarter of all the new developers coming into the space, and in general, 300 new developers. So this is developers who have never touched crypto before. So 300 new developers per month commit to the Ethereum ecosystem, and then for decentralized finance, obviously we've talked about how much that space has grown, but developers for that has really grown as well. So there's, since just January 2020 to, I think we stopped counting October 2020. So in 10 months time, the number of monthly active developers that were working in decentralized finance actually grew by 67%. So these are, some of the numbers that we look at and some of the signals that we look at to understand which ecosystems are really growing. And the reason, of course, developers are important is because they build, whether it's the applications or the core layer. For the developers that are working on the core protocol, they are the ones making sure that the protocol is working. Developers working on applications are the ones that are going to be building value, bringing in new users as well. And so I would say for crypto especially, developers are an incredibly important signal that we look at when we're considering investments.
Yeah. If I could just add to that, Maria, I think that if you're going to ask a question like, how do you make investment decisions in blockchain, you have to sort of disaggregate what is blockchain and all of the investments you could be making. Because, on the one hand, there are enterprises building on distributed ledger technology. At the other end, there are projects leveraging distributed ledger technology to create network-based open source programs. There's also the opportunity to invest for the long term, be a trader and trade, for today's price and tomorrow's price movement. And the decisions you make around each type of investment are different. So I would say equity investing in blockchain businesses building on top of distributed ledger technology is, just like Maria says, a pretty traditional, almost software-based investment decision-making process. However, if you're going to invest in a token that is being created by a distributed network project, it is actually a very different decision-making process. And it has to do with a lot of the things Maria said. It's remarkable to me that if you go to a Google or a HP or whoever, they have hundreds and hundreds, if not thousands, of full-time computer developer engineers and scientists working for them. But if you look at the Bitcoin blockchain, it only has a handful of hundreds of mostly part-time developers working on it. So the scale of things is very small, and the number of engineers who truly understand these technologies is very few. And if you can back some of the best, you look at something like Polkadot. Gavin cut his teeth creating Ethereum with Vitalik. He then decided he could make it better, and he spun out. He took a small community of incredible developers who bought into the vision. And today Polkadot is absolutely moving up fast. Will it be complementary to, competitive with Ethereum? Will it displace Ethereum or be crushed by Ethereum? I don't know. But what I do know is there's a great example of a fantastic team with a good vision who are able to build what they said or are in the process of building what they said they would set out to build. Well, all of that had to do with long-term investing. But how about if we wanted to talk about how do you trade in this space? That's a completely different skill set, and you use completely different information And I know you're very passionate, Marina, about data-driven decision making. But by the time you get to trading, it's all about the data, and it's all about the signals, and it's all about having an edge. And that's why, you know, sitting at SFOX, we're lucky. We combine all the world's compliant exchanges. We get all of the data and all of the feeds, and then we make that available back to anyone who wants to trade on the platform. So it's a good way to get edge, but it's very different from being an equity investor.
I think there's another piece too to pick up on, and that is, Maria, when you talk about the flight to quality, and this is why I think right now is so interesting, is that you have projects like Polkadot. I would put Celo in that camp too. We now have, you know, blockchain has been around for over a decade. We now know it works, but we can innovate now. We can make it better. We can make those fundamental layers better. And if you're looking at this next wave of projects that are improving on the original, moving to proof of stake, moving to more efficient transactions and usability, you can look at other things too. So speaking from a Celo perspective, Celo is a fork of Ethereum. It is its own blockchain. It is, I would say, builds on Ethereum, but there is compatibility with any applications built on Ethereum. So now you have that second generation blockchain, you have big improvements in the infrastructure, but if you're a developer on Ethereum, you can easily move your app, your dApp to a Celo or somewhere else. So I think that's another aspect and what we're going to see this year of the second generation really taking off. And if we see that flight to quality, we're going to see some really interesting innovation this year, in my view.
Yeah, I agree with what Matthew said. So I think we have to have very different perspective when we do the primary investing and then the secondary investment, right? Such as trading. So for example, if we do the primary investing, which is very similar to VC actually, of course, you have to have good vision, good team, and good product market fit, of course, good technology. That's like very basic. And also like community, right? As Maria mentioned, if it's a layer one, you want to see the developer community. If it's the application layer, you want to see how many users or even like MAU and etc. But I think like when we make on primary investing in the blockchain area, the one thing that we really have to keep in mind is, of course, like token economy and distribution schedule. And number two is the liquidity option, right? So number one, by token economy and distribution schedule, we have to check how many, what percentage of tokens is allocated to team and advisor, and what percentage of tokens will be raised from the ICO or even like the public floating or even IEO, which is the exchange listing, and etc. Because it can really make difference on the pricing. And number two, the liquidity option is very important in this area. I mean, when we make an investment in the startups, we expect that it's kind of long-term, and we expect that either this startup is gonna get acquired by a bigger company, or if it's a superstar, go IPO. But in this area, it is true that we can have the liquidity option much earlier, right? Because listing is happening much earlier than the regular startups. So I've seen a lot of great tech projects founded by great engineers, but they just don't even think about the listing options. And basically for investor, there is no liquidity. I mean, thanks to DeFi, there are more and more routes that we can get the liquidity, but still the central exchanges such as Upbit and Bithumb from Korea and Huobi Binance from global, but essentially from Chinese origin, and Coinbase from the United States, and some other exchanges provide a lot of liquidity. And I think as a founder, you have to also think about the liquidity options. So when we look into the primary investing, we also see whether this founder or the team have capability to present their projects to exchanges, and they have a connection or not as well.
Yeah, I think you make some great points there, Sinhae, because yes, you look at blockchain companies as more traditional investments, but they're blockchain companies. And like you said, they all have value because of the tokens they have. And so that is a new dimension that is different. And this is where I'd like to go next and spend a little more time. And that is, yes, you can look at the initial technology, but it's nothing without the communities, and whether the communities are flourishing and developing and building and using, these tokens. So from what you guys have seen, and are there certain types of data, or what kind of data do you look at to evaluate a company's long-term prospects in terms of that community? And what do you look for in terms of adoption?
Can I jump in there?
Yes.
So, so I want to go back actually to Brynly's comment about carbon credits, but I'll use it as an example to answer this question, Marina. I don't know if Brynly already knew or not, but last year we launched the first Universal Protocol Alliance, launched the first tradable RED+, which means rainforest carbon credit token. It's called universalcarbon.com. and or UPCO2, and it already trades on Uphold. It basically allows anyone in the world to buy a small fraction of a carbon credit, and in so doing, demonstrate their commitment to climate change. Today is, after all, the day when the United States went back in the Paris Treaty, and Glasgow's United Nations Global Climate Summit will be upon us very soon. In addition, if you want to retire your UPCO2, then you can positively impact your own carbon footprint and send, resources back to the people trying to save the forests. Well, in launching that product, we had to ask the question which you just asked, which is, do we think it will be of interest to people around the world, and how do we assess that interest? And it's a slightly difficult task because this is a new to the world product. A long time ago, I was asked to go to Apple to talk about, it's more than 20 years ago, to talk about how do you assess markets for products that don't actually exist. And it's a really difficult thing. So these are some things that we did do, both with Viridium and Spark, which were predecessor carbon token initiatives, and then with this one, Universal Carbon. Well, first, you look to the audience that you're going to send the product to. So in this case, this is a digital commodity, a crypto commodity. It's got to go through digital wallets exchanges. So therefore, it's got to reach customers who are digitally active, understand crypto, and want to support the carbon market. So then you ask them, you go out and you ask those people, and we did. It turns out 90% of millennials love Bitcoin, but they also think climate change is one of the defining issues for their future and their children's future. So straight away, you're in the middle of an important situation. They are embracing crypto and digital wallets, and they really care about the climate. The next thing you do then is look for substitutes and alternatives. How can they today satisfy this need that we're about to launch a new product into? And the answer is not easily. Almost no one in the world can easily buy carbon credit today. Big companies can, and most of us can't. If we try, it will be difficult, time-consuming, costly, and in fact, we'll probably overpay because the spreads are too large between, the seller and us, the buyer. So that's a great opportunity. There's a disintermediation opportunity and a chance to reduce friction of all sorts, price friction, cost friction, time friction, complexity. All of those things can be taken out with a digitized version of the same thing. And then, of course, you look, for other competitors. Is anyone else trying to create a digital carbon token too? There is another group called MOS in Brazil, and we wish them well. We hope they do very well as well. This is a very big opportunity, and the world needs this. So data around all of those issues, current consumer demand, implicit unmet consumer needs and demand, the friction of people getting something substitutes today, and the cost opportunity or the profit opportunity that presents. Competitors and who's out there and what are they doing and can you beat them? And then, of course, we got into a whole bunch of work around go-to-market partners. And on that last note, let me just say this particular carbonized token, universal carbon, is available for every digital wallet, every digital exchange in the world. We're not trying to monopolize it. We want to give it away. And if Electric, or in fact any of you, have a wallet or an exchange and you want to have a carbon credit in it now, we'd love to give it to you.
So Brynly, or Maria or Sinhae, do you want to talk about community adoption and the metrics you look at there?
Maybe just a call out to Maria and Electric Capital. I'm looking right now at the report coming out, the developer report, January through October 2020. I think it's a great resource. I'm happy to put it into the chat, but I think it's a great way to just look at developer interest, because this is a really big indicator of, it speaks something to the technology. I think developers don't go, to Maria's point, they don't go to a technology that is inferior to others. So I think it can speak to that. Maybe something we haven't talked about is consumer adoption, actual user adoption, and those numbers. And I think that speaks to something else. We're talking about blockchain that is historically very, very complex. And I think there's really been a gap between what is possible and user adoption. And it's been that there's been a gap for all sorts of reasons, but let's just look at what it means to interact with the blockchain and who can keep that long hash in their head. You can't, right? There is a level of complexity that makes general adoption very challenging. So I think looking at projects and looking at blockchains that look to address that and to make it more accessible and simplified and self-explanatory to a broader audience, I think that will drive usage, which then becomes very important when you look at the potential success of a project. So another thing to call out. I know we're getting close to the end of our time, so I'll leave it open for other folks.
Yeah, I guess the only other thing I would add, and thank you so much, Brynly, for the kind words. I very much appreciate that. I think maybe the only other thing I would add is, governance is definitely a huge part of a lot of the protocols that we're seeing here. And governance, in crypto just means, how does the community become stewards of the protocol itself? And how does the community decide how the protocol develops? Kind of much like a constitution, we have a basic set of rules that we start with, and then the community gets to decide, are these rules antiquated? Does it need to evolve to keep up with the times? And it really hasn't been done on this kind of, it has been done on a massive scale, but it hasn't been done through kind of an incentivized scale before. And that's definitely one of the breakthroughs of crypto, in that everyone who gets to make a governance decision actually, holds a governance token, for example, and are compensated in some way, either because, the protocol itself has some sort of fee structure that goes to the token holders, or that there are people who see intrinsic value in being able to govern the protocol, in which case, I think that's, you can make a very robust argument here that if you are in charge of a decentralized exchange, or an automated market maker that is processing $1 billion in volume per day now, not to mention, further adoption, there is something to be said about the value of those governance tokens. And so, I think that's been a very interesting part of crypto, not only because it's the first time that this kind of incentivized governance has happened, but also because, to some extent, because everything is open source, right? Like, back to kind of the developers, because everything is open source, you can really make the argument that anything is forkable. And we have seen so many different forks, right? Bitcoin itself has been forked so many times, or really anything built in this open source way is prone to another group of people coming in and saying, actually, we're going to build the exact same thing and maybe make a few changes, or maybe we don't make any changes at all. And we're just going to create a carbon copy. And what's been really, and kind of what's emerging as maybe the differentiator or the moat for these forkable protocols is the community itself. And so, certainly something to keep in mind when looking at in looking at investments and kind of why it's important to pay attention to the community is that in some way, bringing it back to the investment decision, it is a moat for the project itself to have a very active and very engaged community.
Yeah, if I can just add a few things, I think we have to look at different metrics for layer 1 and the application. So for layer 1, I think we mentioned a lot of things, especially, for example, number of transactions, number of active address, and also we sometimes look at the network freshness. So that's like the ratio between new and old addresses, and also on-chain volumes. And we mentioned so many times how many developers are getting into it. But as Maria mentioned, I think there is the other side of the community as well. Developers are very important, but there are non-developer community as well. We see some of the layer 1 projects, they use a lot of ambassador programs. So for example, we have been working with Argoin for a long time, and they select ambassadors in different countries because they cannot translate all the material into 20 different or 40 different languages. So they increase like community ambassadors who can help to educate the market, not only the engineers, but in general for retail and users as well. And I think like the application layer, it's pretty similar. So when we make the investment decision on wallet or exchanges, it's very similar to other app as well, right? So number of users, like number of new user growth, number of active users, and number of deposits amount, and etc. So those are some of the metrics that we look when we look at the different part of the or kind of category of projects.
So I just wanted to say that 6 o'clock, so it's the top of the hour here. I know we had promised 1 hour. We do have additional questions from the audience. So if those of you want to stay on, please do. If you need to leave, we understand. But I just wanted to say there was an additional question.
Yes.
On any additional comments you can make on sustainability and ways in which environmental, social, governance, and blockchain can work together. I know we touched on some of these elements already, but just wanted to see if you had any other comments on what panelists, what you as panelists look for in these types of investments.
Just on that specific topic, because I've got to leave now. The United Nations Global Climate Summit will be in November in Glasgow in the UK. And every government official, every large enterprise senior executive team and government affairs person and many other people will be there. And I think it would be great if we came up with some bold, big ideas from the distributed ledger community to feature in Glasgow. So to reverse your question, Marina, if anyone comes up with a big idea of how we can use blockchain to materially move the planet forward towards a sustainable future, we should make sure that we pound the tables at Glasgow, because I think there is this somehow disconnect between the power of this technology and the many establishment figures who think it's only used by criminals for illicit activities. And if we showed up in November in Glasgow and had the biggest ideas and the best ideas, we'd get a lot of press. And I think those government officials would go home with a better sense of what this can all do. And so if anyone has a big idea, I'd love them, this specific topic, I'd love them to reach out to me. And also if they can figure out a way of using a carbon credit in the dialogue, that would be very helpful too.
I love that. Maybe something else to add. This feels much more science fiction, but this is actually where we are. what we're talking about here is a technology that can really transform our money and how we think about value. I mean, this is really opening up what money can be. So we talked a little bit about bundling a stable coin with a carbon credit or maybe reserves of forests or water. I mean, this is just the beginning. Like we can really think about what it is we value. If we want to protect our planet, we can come up with ways that we build that into our money. If we think back to when the US dollar was tied to the gold standard, was tied to gold. When gold backed money, we valued gold. It was like having money. So imagine now we're in a world where we can have our money backed in part by clean water and forests. It sounds very science fiction, and yet we're right here. The technology can do it. And once we do that, don't we change our thinking about how we interact with forests, how we think about clean water? It has a value. So I think this is really inspiring to me, thinking about what our technology can do, because it can help us bring our behavior closer to what we value. So high level there is, money is now technology. We're just at the beginning of how we can transform our world.
Thank you. And does anyone have anything to add? Otherwise, I think that's a great way to end this session on a high note there. Thank you all very much for attending. We will have another session next week on data-driven investments, but focused on digital assets and execution. So please join us for that, and we'll have links for that. But thank you all, the panelists tonight. Thank you so much for your time. And we hope to see you on a future session.
Thank you very
the
much.
rest of you, thank you, and have a great evening or a great day wherever you are in the world. Thank you.
Thank you.
Great, thank you.
Thank you,
Bye-bye.
everyone.
Thank you.
Bye.
Bye-bye.
Bye.
Bye.